We're on. We're live.
I can see myself on IG.
Yeah. Oh, you can see yourself on IG, so you should, but we're live everywhere then.
Yep.
Okay, so good evening, and let's really quickly get down to it. So that was just a brief distraction. So let's go. So hi, we're live, and that was just a brief trick there. How's it going, guys? How's your day going? Bami?
Very good, actually. Very good. It's been an interesting day. So I think it's good to be busy.
Yeah. I know. Tell me about it. Tell me about it. And Angela, how's your day been?
It's been an interesting working Mother Day. That's
I like the way you slip in. I like the way you slip in working Mother Day. So we get it. We get it. Okay, we get it. We get it. Okay. All right. So today, what we just want to do is literally just keep on sharing the love with our audience. And there's some questions that have come in, and we just want to touch one or two of them before we go into some of the main questions I've been asked about lead generation, especially in the area of real estate. So the first question I'm just going to read it. It's for you, Bami. I'm just going to read this one out. And I think it was from someone called Mike that was watching last week, and he says he has a dilemma, and he's thinking of how best he can get a CFO to help him with the direction of his finances in his company. Can you give him any useful tips about what a CFO would do and where he might find one best?
Okay, that's a very good question, Mike. I hope you are online and listening. So I think one of the core duties of a CFO is to take charge of the financial affairs of the organization, to plan ahead, to ensure that the company is in good financial footing. You want a really good CFO to make sure that the planning is done, you have the right budgets in place, you have the right financial control in place, the right financial management framework. And that when you're engaging with your bankers, for example, you're putting forward and negotiating the best deal for the organization. The CFO would also typically take charge and liaise with your accountants to make sure that the proper tax planning is done. You're taking advantage of all the tax relief and all the tax benefits. And if you have a growth plan, it will also be your CFO that will be responsible for making sure that growth plan is articulated, very clearly understood by everyone, and then you follow that growth plan. With respect to how you get a CFO, it depends. It depends on the state of the organization. If you've scaled up to the level that you need to get a full-time CFO, I think by the time the business itself will tell you, you would realize that you need a full-time CFO. If you're still at the early stages, if you have a relationship with a very good accountant, you can outsource that. You can outsource that function to your accountant to function as the CFO. But it would be the case that it's an accountant that has experience in that area, has either experience of being a financial controller or being a CFO in the past. A lot of qualified accountants, before they qualify, they actually undergo a lot of training, at least to give them a generalist sort of training that they can also do financial management, because what it boils down to is financial management. So if you have any accountants that's a member of any of the major accountancy bodies in UK, they should be able to function as a CFO. But I think without speaking to you, Mike, it's very difficult to understand what the best solution for your situation is. So understanding the stage of your business, the plans for the future would be, the basis of giving you the best advice.
Well, like you rightly said, I wish he was here to actually answer, except he's watching us live and he drops a message on probably on LinkedIn, because we're broadcasting live on LinkedIn. We're on Twitter, we're on Facebook, we're on Instagram, and we're on one more thing. We're on Facebook, Instagram, Twitter, and YouTube. So I'm showing off. So it's all working. We want everyone out there to hear this and benefit from this. So Mike, if you're there, please respond so that we can know that you're there, and then we can actually help with we'll find out if that answer suffices. If not, what we can do to help you better. Okay, Angela, what we're going to do. So let's divert slightly. Angela, how is life as a professional and a mummy? Tell us, because there's so many other lovely mummies out there. How can we help? Tell us.
So I saw a post that said something along the lines of don't pursue entrepreneurship if you're not ready to basically sacrifice. And I think I was discussing it with you, Coach, and I said that actually one of the biggest sacrifices for me, actually, from moving from a full-time secure city job to being self-employed, is just the loss of my nanny. That's been the biggest challenge. But I appreciate the sacrifice, and I'm just praying that it pays off. But it's a juggle. It really is a juggle. Today you've got Angela on volume 2. I normally operate on volume 7, 8, 9, 10. But you have a milder version of me because I have to preserve my battery because I have a baby that's unwell. So I think for me, to summarize it, it's a sacrifice.
Wow. Okay. Well, what can we say? We wish you the best. We hope you very, very speedily. I don't know. It's not a sickness. What do we say? It's just high empathy. We want you to be able to balance your work life. So,
Yeah.
and obviously in the game, family comes first. Definitely, yes, family comes first. So hopefully that will happen for you very, very soon.
Yeah, I just wanted to mention also that my birthday is in May. So what I'd like, my birthday is a nanny, in case any of you are asking. Don't send me chocolates, don't send me flowers, don't send me Prada shoes, just send me a nanny. Thank you.
Yeah, I like that. Okay. But I mean, let's get to work. Let's get a headhunter. We have a headhunter in our midst. We've got Tukumbo. I don't know if she's listening right now, but we're going to get Tukumbo. We need to get some interviews for a nanny and give it to our in-house solicitor so we can make her happy. Fantastic. Okay, so some people out there were asking me about basically they're asking about marketing and what we could do to help them in the real estate sector. So what I'm going to do is quickly share my screen. I'm going to show what we call a standard automation that generates leads. And then I'm going to explain some of the things that should be done to tweak it so that we can actually get better results. And with that, I'll be looking for, well, there are 3 things really, making sure that what I'm saying obviously is within the law. That's why I have our lawyer here. But I think importantly is that the money we're making from here stays with us. And that's why we have our accountant. We want to make sure that we're marketing, we're making money, and the money stays. It is the nightmare of an entrepreneur to work so hard, make so much, and find out that you have to pay out so much on fines, faults, or to things that you didn't realize were coming. So let me just switch my screen really quickly and just show a very simple, just a simple one, a simple funnel. Let's go from here. Okay, this is a demo. I'm going to bring out a pen so we can all see what I'm referring to here. Doesn't sound like magic. So whether we are on social media or you're on Instagram or Facebook, YouTube or Clubhouse, I don't really put LinkedIn here because LinkedIn does have fantastic leads, but it's not always used for paid traffic. You can use it for paid traffic, but you'd find that the options you get here for paid traffic, they literally work better. And when you come to LinkedIn, there's some organic ways, and I was just sharing with Angela before we came on about my organic reach, and I'm going to actually show that as a separate slide. But the bottom line is, everyone wants, you want these 6 billion people out here to somehow come into your world, and these are probably the 4 most popular ways. When I say YouTube, I mean YouTube, Google, because that's one family, Facebook, Instagram, same family, and then the new baby on the block, which is Clubhouse, which is also organic, but it has very interesting ways that you can actually generate leads to your business. So if you're an architect, and or you're a surveyor, or you're just an investor, or you're a builder, I've been receiving all of these questions. So this answer really is for you. The long way, the question I got was really about building communities and not just sales. So the long way to actually develop a community online is to actually engage what we call your outposts. Your outposts are these social media handles here. You want to put up posts for the purposes of people liking your posts, finding your posts beneficial. So things that you should have been charging for, you're actually literally giving it away for free on these posts. And I'm going to give you a really good example of one right in the next 20 minutes or so. So without valuable content, people may see your post but will not engage because they're busy as it is. So for them to really stop, like, and comment, follow you, want to ask you questions, is because they've seen high valuable content that normally should be paid for. So you want to put it on one of these 4, and then behind here you have what we call a simple survey link. It's just a link that when people do find your content interesting, they can then jump onto something inside that you call a quiz, and it's designed to actually understand why your audience are asking you questions. You want to segment by age, you want to segment by gender, you want to segment by effective purchasing power, you want to segment by needs, so that you can have something much more streamlined, and you know exactly why they are engaging you, and in return you will know exactly what to send back to people, because you don't want to send people the wrong information, because they're already loaded, and if they read it, think it's not for them, they probably may not read your second or third email because they felt the first one didn't hit the home run. Therefore, you might have lost someone that you spend a lot of money engaging. From there, you segment them, like I said, by age, by gender, by needs. And then what you could do is, and this is the long way, send them a nurturing video. And from this point, you will know if you want to disqualify them. But disqualify doesn't really mean don't talk to them anymore. It just means that they're probably not your A clients. They're not the clients that you want to sell your premium products to, because these guys are here. So these guys down here are the ones that, well, you've already got their data, you've paid for their data, or somehow you've connected with them, and you have to provide them with a lower type of service, right? So that is how you can funnel your audience into a community, and you keep nurturing them. So you don't want people to forget about you. Want them to consistently remember something about you and your business, so that when they have that pain or that need, one of the first 3 names that come is your business brand or your name. It's critical that happens. So I'm going to show you, I think last week I was showing off how this works with paid ads. I gave some really good examples, but today I want to show how it works organically. So I'm going to just close that for a second. And I'm going to show you how organically on LinkedIn, we can do exactly the same thing or even better. So I'm going to go to my LinkedIn page and just show you this. So here we go. So right. So well, my LinkedIn, if you're on my LinkedIn now, just go into my profile. I posted this up 4 days ago. So that's that. So that's me 4 days ago. And I applied some things that I teach in my mastermind, very subliminal things that people probably know. You probably look through it and not actually recognize what I've embedded here, but people in my mastermind will know exactly, or should know exactly, what I've done. If they've not, then they need to they need to go through this again. All right, okay, and we're going to answer questions on Twitter as well. Okay, just saw that. So here is something I put together, picture of myself, and I've just made a bold statement, and obviously by myself, and a few posts there, and 73 likes. Oops, let me just show you that. So from the last 4 days, 73 likes, 63 comments, but all powerful, 74,000 views, right? So that's almost 100,000 views. So almost 100,000 eyeballs would have seen and heard of Sam Onigbanjo, and they would have seen that that name is aligned with things that can be taught digitally. So, and hashtag property development, entrepreneurship, leadership. So gone to that niche, they've sat there, they've looked, many have liked, many have commented, but far more have viewed. And when people view, some of them have inboxed me, and some just make silent observations, and many have just literally followed me. So I'm looking and I can see them following. And in the midst of this, it's true that when you have 74,000 views, you're probably going to get a lot of people that are just playing about and just have nothing to do and just click on you. But let's have a deep look into the sort of people that come and are actually viewing this. I'm going to click on the views, and then it gives us some insights. So we've got people from Amazon, Ernst Young, 226, Deloitte, Tata Consultancy, Accenture, all looking at this. 4,000 plus salespeople, software developers, executive directors, founders. And then we've got people from different areas. So 2,000 from Greater Delhi, 2,000 plus from New York, 1,000 plus from Greater Bengaluru, and 1,700 from here in London. So it's, yeah, and I can show more, really. It just goes down more. So you can see those from Microsoft, Capgemini, the consultants. It does give a really good view of the sort of people that are engaging. And this is what you want. And to have this without spending any money can only be done by understanding truly how to play about with your funnels and your timings and your posts. So there's nothing magical there. It's right on my page. And yeah, so really it can be done. But this type of approach is not what we call a lead generation approach. This type of approach is what we call traffic for visibility. So it's one thing for you to have an audience that come to you to buy, which is the ultimate goal, but there's another need, and that need often is before the buying need. It's people knowing in the first place that you are there, that you're visible, that you exist, that you're an option. So if people do not know that your business is an option, it's going to be almost impossible for them to buy off you. And that's precisely why we're broadcasting here on LinkedIn, we're broadcasting live on Facebook, we're broadcasting on Instagram, we're broadcasting on YouTube live, and we're on Twitter. All right, we had a question about Twitter, but I just forgot it. But we're on all of them. We're on all of these handles because we are making a deliberate noise. We're being visible, we're engaging, and we're letting people know that some of the finest lawyers and accountants and marketers are right here in this group. And that if you want help from them, you need to connect with us. And if you want further services, obviously it's an inevitable step. So if you have questions about how we can help you with your brand visibility or your lead gen, please feel free to ask. I'm not going to go deeper into the paid side, and that's because honestly, last week, that's what I covered, and you can actually go to, was it last week? It was the week before, sorry, it was the week before last that we covered, and we gave a bit of an insight into how to generate paid leads. So it's up on my page. You can go there, view it, and action it. So if there are any other questions on this, I think the only challenge I'm going to have is that there's so many screens to look at, but I'm going to try and look and see if there's any questions popping through. If not, I'm going to go back to our CFO man, because quite a few people want to know more about the CFO. Okay, so I'm going to close this and jump back. Cool. Right. So let's go back to our CFO questions. I have a question here for you. Tell us, what is the key difference between having a CFO in a business and an accountant? Rumor has it that a CFO is the guy that sometimes tells you that it's better for you to pay more tax, because if you paid more tax on this, on the long run, you would benefit from that. And rumor has it, so remember, it's not me saying it, it's just rumor. Rumor has it that accountants say, no, avoid that and avoid that and avoid that, and you pay less tax. And look, I've helped you save money. But then on the long run, you shot yourself in the foot. So it's only a rumor, but I'm giving it to our in-house accountant and CFO to tell us, is this true?
It's not a rumor. It's not a rumor. Your CFO is your accountant is the one that keeps your books, helps you crunch the numbers, and helps you calculate what profit you made, what losses you made, what gross margins you're making, and what taxes are due. But your CFO is more like the ideas man. It tells you, okay, this is what is coming in, and this is how we need to plan for it. This is where you've told me we want to be. And financially, if we want to get where you want us to be, this is how we're going to run it. So sometimes it might seem counterintuitive that your CFO will tell you, you need to pay some taxes now. It's saying it for a reason, because there might be other benefits in future that you can tap into by being in a particular tax bracket. It then qualifies you for additional benefits in future. But it requires a lot of thinking. It requires a lot of planning. So it's not a myth. So sometimes, if you look at COVID, for example, if you hadn't been paying taxes, how would you have tapped into all the benefits that the government made available? So your CFO understands economics. He understands what the economy is doing, what your business is doing, and what's likely to happen. Your CFO plans ahead on your behalf financially, so that you are in a good financial place, so that you're not struggling when you had all the means to prepare yourself. So if you're going to go through maybe a period of mergers and acquisitions, for example, your CFO really needs to sit down to say, okay, this is the state of our finances. This is how the sort of companies we're going to be going after in the future. And these are the sort of numbers we need to be able to bid to buy those companies, right? To be able to say, okay, if we have these numbers, we can go to any funder to give us a funding. So your CFO is your ideas man. So that's really, not a myth. It's true. So sometimes your CFO will advise you to pay more taxes. It's not because your CFO hates the company and wants you to lose money. It's just because the CFO is preparing you for better times.
I like that. So the question obviously is that, so are you our accountant? Are you our CFO?
Well, again, you can have an accountant that can perform both roles. The reality is you need to be an accountant first before you can evolve into a CFO. Your CFO would typically be, they've gone through all the professional qualifications, they've done MBA as well, they understand business, right? So it's not just about keeping the books, not just about crunching the numbers. It's that deep understanding of the dynamics of business, so that they can then help you to prepare to take advantage and grow and scale up.
So let me ask you this. Have you ever operated as a CFO?
Yes, I have operated as CFO. Yes, in this London. Yes, in the city, I've done that.
Okay, so that's really interesting. So we know that by default we have a CFO in the house, because it seems like, when you go through those massive applications and you're looking for things, and it says subject to state aid 2 and all these things. So it looks like some of those figure crunching questions there, and some of the things they're looking for are actually the domain of a CFO. So that is very, 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 very interesting. I think it's something that all of our viewers should very carefully consider if you are thinking of not just making money from your business, but you're growing it and then actually selling it as a product. So you definitely want to have the view of a CFO and not just an accountant that wants to save you money. That is really, really, really insightful. Thank you. Angela, so we've asked you one question. We've asked you about being a mummy in business, and you've given us a candid answer, and we know exactly what to get you for your birthday, right? But going forward, what can you give to our people today? What one thing do you think is very, very important for business owners post-COVID? What is that thing from a legal point of view that you're seeing that is occurring and that people need to pay attention to? And then the main question you have, which came in, was about what is the best way to put together a collaboration that makes let me read it. How can we have a how can two people come together in a collaboration, and how can I protect my idea from my partners?
Okay, great. So I think I will take the general question first. So basically, the legal nuggets that you need to be aware of post-COVID. It's not necessarily a sexy topic, but unfortunately it is data protection. So about a year ago, I predicted that data protection claims will become the new PPI claims, because what we find is that at the end of a recession, or at least at the end of hard times, or during the course of hard times, people sometimes use litigation as a means to generate revenue. So what I mean by that is that, non-compliance and breaches here and there that would normally be ignored and forgiven, we find that during times of economic hardship, that people actually begin to pursue and enforce their rights because they need settlements. So you start to get that American litigation culture coming in. We found that during the recession in 2007, the period that it generated the PPI claims, and everybody was pursuing the financial institutions for their PPI claims. Our new PPI claim today is data protection breaches. Because it's so easy to breach data protection. The scope of data protection law is so wide. It applies to anybody that is holding personal data outside of a personal capacity. So all of the telephone numbers, for instance, in your phone that is for your personal use or for your household, it's fine. But anything that goes outside of personal capacity, so even your professional network, even if you're not involved in a business, but you have a network, as soon as you cross the line of data that's not for personal use, then you go into data protection regulated areas. So it's very easy to breach data protection. So I would say that businesses, entrepreneurs really need to look at their data protection compliance. It's very important. Take it a level up. If you are a virtual business or you are very dependent on IT, your IT infrastructure generally, then consider cyber protection insurance, because what that generally does is to protect you if there's been an IT operational issue. So maybe data has been leaked or you've been hacked. That'll be the first one. So data protection compliance is very important. And I explained also previously that actually one of my clients was sued about £1,000 last year for a data protection breach, a very simple one, but they lost £1,000 because of that breach. And imagine you have 10 complainants pursuing you a month. That's like £10,000 a month. So you have to comply, guys. It's non-negotiable. Then there was a question around collaboration. So basically, how do you set up an effective collaboration from a legal perspective? I think first of all, I'll just explain. So in terms of, collaborations, you have a hierarchy. So at the very top, we have what we call legal partnership. And that is when you are generally sharing liabilities and responsibilities equally. Think of it as marriage. And then below the partnership, we have what we call like a joint venture. So you set up a special purpose vehicle to pursue an objective. I would call that courtship, because you're coming together for sort of a project specific or purpose specific capacity, as opposed to just, generally. And then below the joint venture, I'd say you have a collaboration. A collaboration is what I'll say the softer version of all of those forms of collaboration, because in a collaboration, normally everybody will continue doing their business, but you are getting together for the purpose of executing a project or a campaign sort of thing. So as a lawyer, number one, I recommend having a collaboration agreement in place. What the collaboration agreement will do is to capture each party's contribution or responsibility towards the collaboration. For example, let's say this is a collaboration we're doing today. My responsibility is to contribute the legal nuggets. And then we've got our accountant contributing the accounting expertise, and you are contributing the marketing expertise. So you have that. For instance, you have how you'll share risk and claims. For instance, you might say, okay, if anything goes wrong, we're sharing it 3 ways, and any money that comes in, for instance, we'll share 3 ways. But most importantly, you spoke about your collaborators stealing your ideas. One of the things I strongly recommend addressing in your collaboration agreement is intellectual property rights and confidentiality, because obviously in the course of doing business together, you will find out, if they will find out information, internal information about your business, your know-how, and your strategy that you wouldn't want them to exploit. So I'd recommend putting a confidentiality provision that, i.e., any confidential information you have access to during the course of this collaboration cannot be used beyond the parameters of this collaboration. So you put a restraint on them. And then secondly, you clarify your position in relation to your intellectual property. So the following information, data that you may get access to belong to us, and you cannot use it without our license. We give you a license to use it just for the purpose of X, and you can't use it beyond that purpose. So setting out your intellectual property position.
Hold on 1 second, because you're just unleashing it all. I just grabbed 2 words: intellectual property and
confidentiality.
Confidentiality, right? So here is Harry blogs, and he spends 20 hours a day building his business, and he realizes that he needs Joe Blogs in the business. Harry, does that mean that Harry Blogs has to actually list what he define? I mean, I think first and foremost, how does he know that this is his intellectual property? Do you have a sort of guideline? Because some people won't even realize what their intellectual property is.
Yeah, so there are different categories of intellectual property, and unfortunately it's different for each jurisdiction. So I'll look at it from an English law perspective. So we've got copyright. Copyright doesn't need to be sort of registered, or there's no legal formality to follow in relation to copyright. Copyright basically just sits with the author or the creator of the content, basically. So if you're writing something and you're the originator of the content, then you automatically inherit copyright. And the way that you protect your copyright is by you put the public on notice that something is your copyright. So for instance, you'd say, if you produce a material that's copyright of Sam, for instance, you put them on notice that it's your property. This is my car, don't touch it. Then you have trademark registrations. You do have to file for trademark registrations. And what trademarks do is they protect the name, a logo, an image, or brand, basically. And it gives you the ability to put the TM beside, a brand, to put on notice that it's a registered trademark and it's our property. There are then patent rights, and it becomes very complicated in relation to inventions and processes and stuff, but different intellectual properties, i.e. copyright, trademark, whatever, have different formalities. It's also possible for the owners of copyrights, trademarks to license, so to outsource these rights to third parties. So for instance, you may, for example, Sam, license your brand to me for the purpose of running a campaign or something, I don't know. So it's possible that the parties are not the originators or the owners of these IP to exploit it. But the main point is that when we talk about intellectual property rights, we're talking about property that is owned for the purposes of X, owned by a business or a person. So the same way you own your property, the same way you own intellectual property rights. That's sort of it in a nutshell, but it's different every jurisdiction. Because I think in America, you can actually register your copyright.
Right. So I think the long and short really is that if people want to make sure that their intellectual property is safe, they need to actually come and visit a lawyer like you.
Yes, yeah, absolutely.
Okay,
so one thing to add to that is by the time you end up creating intellectual property, that becomes an asset to the company.
That's right, yes.
It sits on your books. It increases the value of your company.
Yes.
Sometimes it's worth investing in actually securing your intellectual property, because then accounting rules allows you to recognize that as an asset in your business. And when you're then calculating the value of your business in future, it becomes part of it. It becomes what someone else might want to invest in. And if you're selling it, if anyone is buying your company, they will buy it with the intellectual property. So it's an asset. So you need to think about it from that point of view.
And there are so many ways of exploiting even the IP without selling it. Like I said, some of my clients are going into franchise opportunities, licensing opportunities, where they are retaining ultimately the ownership of the IP, but they are giving designated rights to third parties and making an income from it. So it's a property. Same when you have a house, it can appreciate, it can also depreciate, but it's a property, it's an asset to the business.
I'm being schooled. I like that. I like that is that's powerful. So your IP is an asset, and the asset sits on your books as well. Fantastic. Okay, you know what? Something happens when we come here. It's already 38 minutes past 8.
I hadn't finished my collaboration. Did you want me to?
No, go on. I was going to say we've only got 7 minutes left, but I don't know where time seems to just sneak off. So go for it. Go for it. By all means.
I spoke about just setting out each party's contribution, number one. Secondly, I spoke about confidentiality and dealing with intellectual property rights to ensure that you are safeguarding your property. And then finally, I was going to say data protection. So because when you collaborate, you'll be sharing data, personal data from the various parties, businesses and entities, you need to be able to designate what data protection responsibilities, how they'll be split out amongst the parties, who'll be the data controller, who'll be the data processor, who's ultimately responsible for this and so on. So that's why I recommend having a collaboration agreement in place. And it's one of those areas of law where it has to be a bespoke product. It's not one of those ones, unfortunately, where you can just download a template from Google.
Fantastic. So I think the right thing is that, well, the good thing is that these are things that you can do, right?
Yes.
Yeah. I think that's the safety there, because on one hand, there's the overwhelm of all these things. People thinking, well, I've got a business to run, I can't do all of this, but people that will watch this and listen to you will understand how important it is and how much value that you can bring. And that value, like Bami rightly pointed out, becomes an asset. So you're not actually losing creating intellectual property, you're actually gaining assets. I like that.
And I was going to say that none of the clients, I mean, I spent many years advising PLCs, and none of them know the law. Even lawyers who don't know the law completely, because the law is forever changing. You just need to understand the issues and know when you need to refer or call upon the professionals. That's the only thing you need to know. You don't need to know any of these technical areas because they're technical. You concentrate on what you do, but what you need to understand is when it's time to bring in a lawyer. For instance, Coach Sam, I've always used it as an example. You always know when to pick up the phone and call me, and it's time to get your legal input, Angela. That's all you need to know. It's very simple. Nobody expects you to understand or to master the law. It's impossible to do. Oh, are we frozen?
Are you frozen?
Okay, I'm not.
Coach Sam, I think you're frozen. You're not moving.
Can you wave?
I'm trying to work out who was frozen.
You're back.
Was
back.
I think it was you.
It was me.
Yeah.
All right, that's BT. Anyway, but that was a brilliant answer. Okay, we've only got 4 minutes left. Bami, have you got anything that you want to throw out there for our people before we call it a day?
Yeah, I think the purpose, like I keep saying, the purpose of going into business is making money and keeping the money. So you always want to make sure that you get the right advice at the right time so that you don't suffer any losses that are unwarranted, you want to always keep your money. There is no point sweating, thinking about your business all through the night, and then you end up making the money and then giving it back to the market, or losing it to other competitors. So you want to make your money and keep it.
And one of the things that we do very easily for clients is that we minimize your risk so that you always know what your worst case scenario is. So most of the clients I worked with, I knew if something went wrong, this is our maximum exposure. You should have the same, like if something goes wrong, it's a maximum exposure that this is maximum can ever be pursued for. It's very simple to do, but you know, a lot of businesses are operating and their liability is just uncapped, open, which is disproportionate. I always give the example of one of my clients that went into a deal to make £1,000 and took on £1 million worth of risk in exchange for £1,000. Like, does that make sense?
That is a dangerous trade. That is a very, very, very dangerous trade. And I think it's one of those ways that we'll probably wrap up today's show. And for all the people out there that are watching, if you've been, this is just a free gift. If you've been interested in capital markets and you've been looking at the crypto markets, because I know people love the cryptos, it looks as if brother Bitcoin and Ethereum have woken up back to life. So so that's just a free tip. If you're there, you might want to pay attention to it because it might make you some good money. But remember, everything with trading, 72.6% of the people that trade tend to lose money. So that's my disclaimer. All right.
Love it. I love it.
I've been taught well by the best lawyer in town. I've been taught.
Pre-contract information.
All right, people, look, like we said, it's all about us giving. So if you've enjoyed this show and you believe that you want to play it again, please do so. It's free in the public domain. Share it with your friends, invite people. You can come on any of the platforms. And if you have questions, please feel free to ask. We have a mastermind of these brains, and we're going to be unleashing a product soon that all of you are going to benefit from. That's if you're interested. So from myself, from Angela, from Bami, we're just saying a good night all. Thank you, people.
Bye.
Have a good night.
Thank you.